Goodness me, I swear, if I have to manually transfer money from my checking to my savings one more time, I'm gonna lose it. It feels so 2015.
First world problems, much? But honestly, you're not wrong. We're standing right on the edge of that being over. Like, completely over.
Wait, are you talking about those robo-advisors? Because I've got one. It's boring. It just buys index funds and sits there.
No, forget Robo-Advisors. That's old tech. That's a calculator with a nice UI. I'm talking about autonomous financial agents.
Ooh, agents. Sounds like a spy movie or a Matrix thing.
Kind of. So, look, today on the Pod Slice Daily, we are diving deep into this report on the algorithmic steward, and honestly, it's wild. It's about the shift from automated assistance, which is your dumb robo-advisor, to autonomous agency.
Okay, break that down. Agency. That means it makes its own choices?
Exactly. Think of it like this. The old way, the user tool paradigm, is you using software. You drive the car. The new way, the principal agent paradigm, you're the boss, the software is the employee. Or even better, you're the passenger, the software is the driver.
Self-driving money?
Self-driving money.
Whistles. Okay, I like the sound of that. But how? Because my current banking app is dumb as rocks.
Right. So the report breaks down the tech stack. It's not just if-then rules anymore. It's using LLMs, large language models, for reasoning.
So it's like ChatGPT with my bank login? That sounds terrifying, actually.
It's a little terrifying, but cool. See, traditional apps just see numbers. These agents have multimodal perception. They can read a PDF of a trust deed, parse a tax regulation, or listen to an earnings call.
Whoa, it can read the fine print?
It reads the fine print for you. It builds a world model of your finances. So instead of you manually budgeting, this thing is doing chain of thought planning. It goes, okay, CryptoPod wants to buy a house in 2026. Step 1, analyze burn rate. Step 2, liquidate these low-yield assets. Step 3, negotiate his internet bill.
Wait, negotiate? It talks to Comcast for me?
Yes, that's the action part. It's called agentic commerce. It doesn't just tell you you're overpaying. It logs in, contacts support, threatens to switch providers, gets you a lower rate, and you don't even know it happened until you see the lower bill.
Dude, that is the dream. I would pay a subscription just to never talk to customer service again.
Right? It's basically an AI CFO for your life. Like imagine having a family office, wealth management, tax optimization, estate planning, stuff that used to be for the ultra-rich. Now it's software. It's democratized.
Okay, I'm sold. Where do I sign up? Take my keys, drive the car.
Oh, well, hold on. Before you hand over the keys, we got to talk about the crash.
Oh, here comes Dr. Doom. I knew there was a catch.
There's always a catch. The report calls it the trade-off of epistemic agency.
Epistemic what now?
Epistemic agency. Basically, if you stop driving, you forget how to drive. If an algorithm makes every financial decision for you, optimizing your taxes, picking your stocks, paying your bills, you become a passenger in your own life. You turn into a black box user.
I mean, if I'm rich, do I care if I know how the sausage is made?
Maybe? But what if the system fails? You have zero financial literacy left. You're helpless. And then there's the algorithmic governmentality.
That sounds like a dystopia.
It kind of is. The algorithm optimizes for numbers, but life isn't just numbers. Maybe it sees you spending money on, I don't know, vintage comic books and decides that's inefficient. So it nudges you to stop. It imposes a capitalist logic over your actual enjoyment of life.
Hey, don't touch my comics. That's a store of value.
Try explaining that to an LLM that only cares about yield. But it gets scarier on a macro level.
Hit me. How does this blow up the market?
Monoculture. Imagine millions of these agents. They're all running on similar foundation models, maybe GPT-6 or whatever. A geopolitical crisis hits. A normal market has diversity. Some buy, some sell.
Right. Bulls and bears.
But if all the agents are rational and risk-averse and they all read the same news, they might all dump assets at the exact same second.
A flash crash.
A massive one, a liquidity death spiral. And then there's tacit collusion.
Collusion? Like price fixing?
Exactly, but without breaking the law. These agents learn that price wars hurt profits, so they independently decide to keep prices high. No secret meetings, no emails, just algorithmic silence.
The bots form a cartel. That is wild.
Yeah, it's a nightmare for regulators. How do you arrest an algorithm for antitrust violations if it never actually conspired with anyone?
Man, so we get convenience, but we might accidentally break the stock market and turn ourselves into helpless passengers.
Pretty much. The report says the future isn't fully autonomous, it's bionic, human on the loop. You're not driving, but you're the pilot watching the instruments, ready to grab the stick if the autopilot goes rogue.
I can live with being a pilot. Just maybe don't let the AI sell my crypto stash while I'm sleeping, okay?
No promises.
So, here's the big question for everyone listening. If an AI can make you 20% richer, but you have to give up total control of your financial decisions, do you take the deal?
That's the one. Let us know in the comments.
All right, that's a wrap for the Pod Slice Daily. Don't let the robots win.
The content of this podcast is for entertainment and informational purposes only and does not constitute financial, investment, legal, or tax advice. We are not financial advisors. Trading risk assets and using autonomous agents involves significant risk. Do your own research.